What's up, guys? Filming back to back right now, so let's get into it. So, this time I'm going to talk about penny stocks versus large cap stocks. And penny stocks are stocks that are low, usually less than $5. And large cap stocks, successful companies. I'm just go ahead and say it. Maybe you got Johnson Johnson, maybe you got Apple, maybe you got Microsoft. Now, let's say penny stocks. I'm not going to try and talk bad about any company because I have some penny stocks. So let's say Zomatica. I've been with them since about 2020 and I've been holding them. They're a pretty good company when it comes to news. They're just trying to get more of the pet pharmaceutical market share. But let's say you got Zomatica. Let's say you have Toast Therapeutics and another small cap stock. Let's just go with, Rolls Royce has less than $5 per share. They have like about 140 ish or 160 ish. So the main thing is about penny stocks, they're very, very volatile. Now, obviously, the stock market is volatile, but penny stocks are extremely volatile compared to large cap stocks. Here's why. Because penny stocks have usually not a bad balance sheet or a bad income statement, but they don't have as much money as a large cap stock. They're mostly based upon speculation. So as I said before, with bonds, you have speculative bonds, you have investment grade bonds. Investment grades are the good ones that usually don't default. Speculative, not so much, or as known as junk bonds. So when it comes to stocks, people invest in penny stocks because the higher the risk, it's a higher risk that you're going to lose a lot. So let's say you invest in a penny stock at $2, but it's going up to about 3, 4, even $5. You're like, man, I got to ride the wave. There goes the fear of missing out. This what happened with the whole GameStop fiasco when people saw it at the top. They said, man, $400? Oh, we're going to get this bad boy to 1,000. And what happened to GameStop? It got to like 440 or something like that, depending on what trading broker you're on, and it went back down. And a lot of people said they lost a lot of money because they went up at the top and then it went right back down. That's the thing about fear of missing out. You go into a stock that's originally a penny stock. When GameStop went down, it was about $3 per share. Then it got to about 9 or something like that. And then after that, it went all the way up because a lot of the market was flooded by investors just trying to pump up the stock. But there was really no fundamental value behind GameStop because GameStop itself, not talking bad on them, but their company has went downhill since the recent times of streaming games. When you have Xbox Game Pass, you got PlayStation Plus. A lot of that stuff just takes people away from going to the brick and mortar stores, and it allows stuff like GameStop, or well, not even Best Buy, but GameStop itself, to not be as profitable as it used to be. See, now you can just buy games online and you don't have to worry about going to the store. So that's what GameStop is a penny stock, because the company's not profitable since the industry is being changed over to select streaming. Now, back to the topic at hand. When you invest in a penny stock, you are taking a risk, a large risk. When you invest into a large cap stock, let's say you invest in Tesla. Well, not even Tesla. Tesla's doing kind of bad right now, but let's say you invest in Amazon, Microsoft. Okay, you invest in those and they're usually a company that gives a dividend that increases regularly, or if it doesn't increase regularly, they're a company that is well known for having a stable stock. So you obviously know that you can trust a company that has stable income. That stock is either stable, it may fluctuate a little bit, but it's not going to fluctuate to the point where you say, I can lose all of my money. A large cap stock is a company with a great balance sheet, great income statement, a company that prides itself in helping its investors. Now, every company has probably the same basic mission statement. We want to maximize shareholder wealth because that's what we're here for. But at the same time, some companies do not have the necessary resources to maximize shareholders' wealth. So if you have a penny stock, a company is most likely trying to make its way into the market share. You may see the market cap be under $1 billion, maybe under 700 million, maybe under 500 million. And you're going to say, well, I want to take an investment risk. And yeah, you can take a high risk and you can have a high reward. So let's say you invest 10 grand in a penny stock that's at $1 and it goes up to 5. Well, okay, there you made your money. But at the same time, you have to understand, did you hold it for a year? Did you get short-term capital gains, long-term capital gains? And a penny stock is just that it's a lot more risky because it's lower on the board. It can completely wipe you out or it can help you a lot, but that is the high risk. Now, when you go to a stable stock like Microsoft, maybe Amazon, then you're like, okay, it won't fluctuate a lot, but I know they can give me a dividend probably. Go Johnson Johnson. Yeah, they give me a dividend. That's cool. They won't fluctuate as heavy as the penny stock. So you can basically trust your investment in a way, because the large cap stock is not as prone to fluctuations and volatility as a small cap stock. See, whenever the market starts to crash or go down a lot, you have a lot of money in penny stocks and you'll see a lot of money go out. Large cap stocks, not so much. You may see a pretty good amount of your investment just going down, but at the same time, you won't see your investment go down as heavy if you invest in something that's lower. So let's think about it this way. You invest money in a company that is trying to make the most of their market share, that's trying to take over the market share, but they're a startup. They don't have a lot of traction. So you're saying, okay, I want to be one of the investors to start out investing in them so that way I can make my return on my investment in a couple years, maybe a decade down the line. But that company goes downhill, they have to do a reverse split, and therefore most of your shares are gone. Now you took that risk, but you understood that that company was not financially set. That company did not have a lot of PR going out. That company did not take over the market share like they wanted to. And in turn, you lost a lot of your money. But that's the risk of investing. See, you're not forced to invest, but that is the risk of investing in a penny stock. It's lower market, it's lower cap, and you're taking a huge investment risk on doing something that's high risk. Like I said, high risk, high the reward, but at the same time, you have to be smart about investing in a penny stock because a penny stock is a penny stock for a reason. $5 or less, and usually it's over the counter traded or could be on the NASDAQ, but it just depends. Now, when you go to a large cap stock may give you a dividend. That's good. So now you're investing, you're getting money back. Now, it may not be a lot, but at the same time, you're getting paid back because the dividends are being declared. And remember, if you're a common stockholder, you are not entitled. I repeat, you are not entitled to those dividends at all. But at the same time, if you do get a dividend, good for you. You picked the right move in a large cap stock that does not fluctuate as much as a short, low penny stock. So that's the main thing about it, is that when you're investing in a penny stock, like I said, I've been with Zomedica. I'm trusting that they have their own share of the pet pharmaceutical industry, and I do believe that they can be a profitable company because the cash looks good. I believe they have cash to last until about 2028. I have to go check the news again. But when you do projections, they're like a pretty good company trying to take over pet pharmaceuticals, something that's necessary because either we all have pets or we want a pet or we understand that pets are essential to us, that we love them. So that's a good industry to invest in. Now, obviously, you got the tech giants that make a lot of money. And you say, well, since they make a lot of money, they dominate the industry, I can trust in them more. Yes, you can. But remember, it goes back to your investment strategy. So investment portfolios, they tell you to diversify because you put all your eggs in one basket, one industry, you may or may not suffer the consequences of having one giant slide when the market slides. So my whole thing, and remember, this is not advice, but my whole thing is that when you diversify, understand the risk. Understand what you're getting yourself into, because I see a lot of people saying, oh, invest in penny stocks. This stock's going to go up. It's going to boom. They follow Reddit. They follow Twitter. They follow everything. Like when Dogecoin was going up, people saying, oh, man, Elon's pumping it. We're pumping it. We're going to get to $1. It never hit $1. It hit around 72 cents when I was on Robinhood. But at the same time, you cannot fall for speculation because speculation will get your money wiped out and low cap things. Now, obviously, it's not a stock. That's a crypto. But that goes the same when people were boosting AMC, people boosting a lot of things that were happening with the penny stock world back in 2020, 2021. Yeah, a lot of things went up, but at the same time, they went right back down. And a lot of people lost their money and said, I'm holding. Well, yes, you could get your money back. You could return to 100. But at the same time, you have to understand, what am I getting myself into? You do a large cap stock, it'll go back up. It'll be stable. It won't take as much of a hit. Well, it depends on your investment, how much you invest, obviously. But you won't take a as large hit when you're doing a high cap market stock, a large cap stock that is predominantly known, that is a big factor in this industry, that basically almost monopolizes the industry or has a large share of the industry, rather than having one that is low cap, penny stock, and that can possibly be delisted. So guys, thank you for watching. Thanks for tuning in. I hope you found this informative. Remember, penny stocks, speculation. Large cap stocks, investment grade. That's my rating right there. Think about it as bonds. Like I said, for bonds, you have the investment grade bonds, you have the junk bonds. So junk bonds, yeah, you probably get a higher return, but you're higher risk on that. They can default. Whereas you can go for low cap stocks, yeah, you get a higher return with higher risk, but at the same time, you can lose all your money. But you can also lose all your money too on a large cap stock at the same time. It depends on how much you invest, but for going for the technical standpoint of things, the fundamental standpoint, large cap is better, penny stock not so much, but like I said, it's your investment strategy. So thanks guys for watching. Please like, subscribe, do the things. I don't really ask for that, don't really like to, but just share it with somebody so they can have some financial information. So please tune in for the next video. Thanks guys.